At the end of its deliberations, the MPC voted unanimously to leave the policy repo rate unchanged at 4%.
Since the beginning of 2020, we saw an accommodative stance being taken by the Reserve Bank of India. Now, what do we mean by this accommodative stance? It is simply reducing the policy rate by the central banks of countries, and in our case, India, to boost the domestic consumption and revive the slumping GDP growth rate. Various international regulators call it a dovish tilt as opposed to the hawkish move. Dovish tilt means when central bank lowers or considers to peg the repo rate at lower values. The dwindling India's GDP growth rate was one of the prime factor for Bangladesh per capita GDP taking over that of world's fifth largest economy in terms of nominal GDP, that is India.
But was this the first time?
No. In 1991, when India was undergoing a severe crisis and grew by just 1%, Bangladesh per capita GDP surged ahead of India's. Since then, India took the lead.
Did RBI do right by keeping the repo rate unchanged for the third consecutive time this year?
The very following statement will suffice to answer this call.
We are actually ushering in our 21st birthday with an all-time high on the Sensex and the Nifty.
With a gain of about 0.25% on the Nifty, the Sensex 2 is higher by a similar amount, up 80 odd points.
Sensex and Nifty at the moment just head above water, but still in the green. The market has been fairly choppy, of course falling from the morning highs. However, there's buying coming in at lower levels as well.
S&P BSE Sensex breached the 45,000 mark for the first time ever, while the broader Nifty 50 touched its fresh high during the intraday trade after the repo rates were divulged by the Monetary Policy Committee of RBI. That showed the market openly welcomed RBI's move, and why not too? Since inflation is soaring high with COVID-19 kicking and punching the growth, making it hit the rock bottom, RBI did not decrease the repo rate below 4% this time, since inflation is a major function of supply side parameters. The lower repo rate kept at 4% unchanged for this bi-monthly period is to allow banks, MFIs, RRBs and various financial institutions, including those that cater to the MSME sector, which is gravely hit by the pandemic, to have credit at cheap interest rates. Big companies will also benefit from this by various ways, including the gains that their operational creditors like employees will absorb out of this. RBI projected the inflation rate, that is CPI inflation, for the fourth quarter of 2020-2021 to be 5.8% and pegged the repo at 4% unchanged in the 5th Monetary Policy Committee meet for the financial year starting from April 2020. Due to slight improvement in second quarter GDP growth, RBI revised the GDP growth for 2020-2021 from -9.5% to 7.5%. Now, RBI did not lower the repo but kept it at 4% since inflation in India is a big challenge to its growth. Lowering repo is good for the growth and very much vital at a time when our GDP growth is struggling in negative figures, but it is recalcitrant with the inflation. Since RBI has a mandate to keep the inflation between 2% to 6%, it took the most apt step to not lower the repo further, since we see that for the third quarter, the inflation has already crossed the upper bar of 6%. Excessive inflation is scathing to our economy. Inflation, when becomes hyper, then it's tough to devise a vaccine for inoculation to heal the economy, as was when Venezuela in 2018 faced hyperinflation as grave as in 2018 IMF predicted that inflation in Venezuela to pin at 10 million% in August 2019. But this was the worst case as have happened to any country. The recovery in rural demand is expected to strengthen, and the urban demand is also improving and gaining momentum as unlocking spurs and employment occurs. The positive impulses are, however, clouded by possible rise in infections in some parts of the country, prompting some local containment measures. while those speculating a further decrease in repo below 4% got a better luck next time on the screens, a majority of the section welcomed the move. In totality, the entire air policy will be crucial for the whole country. As per RBI's monthly bulletin, India's real quarterly GDP is predicted to contract for the second quarter, cold shouldering India towards a technical recession for the first time in the history of independent India. India entered a technical recession at the end of September, but India is not alone among the major economies. It is very much obvious during this COVID pandemic lockdowns. RBI took a positive stand and projected India's growth to recover further in the coming quarters, with quarter 3 growth lifted from -5.6% to +0.1%. Thank you.